So gold is under pressure, still trading near 8-week lows this Wednesday. So could the metal be setting itself up for a rocky summer? We have Frank Holmes joining us today of U.S. Global Investors. Frank, the metal seems to be losing its luster here. I was at the Sohn conference earlier this week where some of the biggest names in finance gathered, and not one mention about gold. So can we still make the case for the metal here, Frank?
Well, naturally, they're going to tell you to buy gold after they already bought their position. They're not going to tell you now that they're buying it. And I think the important part for investors is sit back and look at this accordion of data that's there. And over 30 years of data, we're coming into a cyclical low, a seasonal low. And usually it starts around Ramadan. And Ramadan this year starts, I think, May 28th. And I think when we look back at data points, is an important part of that festival season buying that starts, then goes to India. Then we got to come back to Christmas. So this is the seasonal pattern to be aware of. Short term, what's the daily vol? It's plus or minus 1%, which is $10 to $15. Anytime gold is down, you want to be nibbling, because when it turns, it'll turn. The negative has been central banks have slowed down buying. Why? Because the U.S. has been raising rates. So that's understandable. But positively, India's consumption of gold continues to be very robust and strong. And that tectonic shift does not stop, where bullion is leaving North America, going to Switzerland, being melted down to smaller bars, showing up in India and China.
Okay, but on that note, Frank, I've spoken to analysts who would argue that Asian demand is not enough to affect the gold price. It's really demand on the Comex and futures markets that matters.
No, I would disagree with them. It's the physical delivery. And if you take a look at every time the gold market's been knocked down, is when there's a holiday in Asia, and it's very easy to hit all the bids and trigger a sell-off. There's an ongoing investigations of this drama against banks. And so I don't think that that's a rightful way to look at it, because you can take only 4% down margin and $1 million can all of a sudden hit $50 million of numbers of gold and create this triggering. You can't do that in the physical market.
Okay, so if I play devil's advocate here though, Frank, we have strong stocks, strong US dollar, a rate hike is looming, commodities are under pressure, no fear in the marketplace right now. So what's going to create that floor for gold, Frank?
Well, I think you're going to see what we saw is that interest rates, negative interest rates went worse. Gold rallied almost to 1,300, and now inflation went from 2.7 down to 2.4. I think you have to take a look at what's going to happen with that CPI number. And the global PMI has slowed down. I think that will turn this summer.
All right. Well, any feeling as to where we can see gold headed short term here, Frank?
Well, it's a non-event, as I've said before, that for gold over any 12-month rolling period to go plus or minus 20%. So is it going to fall $200 from here? I don't think so. I think it's probably got $50 on the downside if there's some type of a trigger. And I think this time next year, it'll trade higher.
All right. Frank Holmes, U.S. Global Investors, thanks for joining us. We'll see you next week, Frank.
Happy investing.
And thanks for joining us. We'll see you tomorrow on Kitco's Gold Report.